This is a double leveraged silver fund called AGQ. They recently had a stock split recently, so these prices are looking at half. But it is a quite dangerous fund to use, and I think people should really go into physical silver. I just want to point out why it's kind of dangerous to use. When you look at January 1st, silver was around 31 or close to 31. This fund was paying $78 was the share price of the fund, and now that's at 31 or approximately $31 spot price. Today's spot price is about 35. The fund is at I believe $70. So the fund actually went down even though the spot price is up, because the fund actually moves up a little less than twice. It goes down a little more than twice. But you could see if you bought this in late January when price of silver was, I think, around 26, you bought this fund for 59, it would have went up to 183, and you would have triple your money inside of 3 months if you sold at the exact right moment, right before the CME raised margins 5 times. So you can see it could make a lot of money. I did use this fund in 2010. I made money, but obviously I should have stuck out with it this year. But I don't know. It's like, to me, it's like you want to buy something and get rid of it when it makes money. That's the way I look at it. It's a very dangerous fund. But just like the SOV, look at how many people poured into it volume-wise when the price dipped. So what does that tell you about silver? There's a lot of buyers out there, even in electronic markets, on leverage. And the one thing I have to say about this fund, it could be a lot safer than options because it's not a total win or lose. Where options you could really lose everything or make even more. But I personally, you think you're best off mainly with physical silver. I don't have this fund anymore, but it's just something I wanted to point out. You look at how many people are jumping into silver when this fund is dropping. It's not just the SOV, it's also the AGQ. So there's a lot of demand for silver. This is a SOV chart going all the way back. I just took this off of someplace. I made a very crude trend line. I remember when we were talking about it, I think it was Endless Mountain was talking about this, how he connected some points, and we looked at this upward trend that was going on in the beginning, I think it was from August 30th through 2010, and lo and behold, it touched the same trend line that if you extended it out, when it had the high at the end of April of $47 approximately. And you can look at this massive volume that occurred when the drop occurred again. This is the SOV. Same thing, when the price of silver dropped due to 5 margin increases, everybody bought into it. And so you could see obviously that buyers are moving in, and the people even in electronic markets besides the physical markets know that it's the place to be. So getting back to this ultra silver, you know that people were moving in here very hard at this point in time, even though the only way this fund can work well is if the price of silver is going to be in a serious bull trend. But if we connect these points again, we could see very obvious. I don't have the numbers on here, but if you're talking, you could see that in a few months this can go to like $75 to $90 or more very easily if there's a hard explosive move like has been back here. And the reason this dropped was because people were panicking. It wasn't just a margin increase. It was because of Bernanke's statements. It was also about fears of the euro, need for liquidity. People were getting out of the equities markets in the euro, and they panicked and they went into the U.S. dollar. And here's the U.S. dollar index. It was exploding at the time. The metals markets were going down, not just because. In other words, our metals would have not have been going down as much if we used it. We used some kind of 1-to-1 ratio and just changed the metals price by the U.S. dollar index, you probably wouldn't have seen as much of a drop. It wasn't just because of the CME raising the margins. It was due to panic, people pouring into the dollar. Well, look what's happening in the dollar index. If they're invested in the U.S. dollar, they're losing out. So you might see a panic jumping right back into silver again. And to talk about psychological panics, palladium. Look what happened in 2000. There was a explosive price in palladium. Gold was a little over $300 an ounce, and palladium went to, I think, almost $1,100 an ounce. I don't know if it was $10.75, and that was due to the Russian supplies being depleted, or rumored to be depleted. So everybody was pouring into it. Now, I don't want to knock technical analysis, because I think technical analysis is a very good tool, but if you looked at technical analysis, you would not expect a pullback like this, because you'd be looking at this trend upward, and you'd wonder if there'd be a pullback maybe over to here and then up again. But what happened was the whole landscape changed, because Russia said, we have plenty of palladium, and they just killed it. So sometimes you got to look hard at the psychological factor, and you know, and the fundamentals and the technical. And I think Mark Farber looks a lot at the psychological. Like he says, when market sentiment is very high, you know, be wary, because there could be a hard pullback. You know, it's a bubble. You know, he calls it a bubble, like this was a bubble at that time. Now down here, you know, I bought palladium down here because I thought it was a really good deal, and it turns out it was, even though it had a pullback. But you know, I'm still way ahead and all this kind of stuff. So you know, I'm just holding on. But I want to just say something a little bit about palladium. There's a lot of speculation, because I don't think it's speculation so much as fundamental fact. The Russia is pretty much, they were hoarding palladium for decades before they found a buyer, and it was Ford Motor Company, I think in 1989, was their main buyer for catalytic converters. So they had this huge supply of palladium for decades. And that is one reason palladium has been so cheap. It's really about as rare as platinum, and platinum usually runs 1.4 times the price of gold. So they expect that, you know, it's thought that palladium's price will surge upward and overtake gold again, and it's going to take several years, but the gap between palladium and platinum should pretty much be very narrow. They should be pretty close to each other. So if you expect gold to go to $5,000 an ounce, platinum be $7,000 an ounce, maybe palladium might be $6,500 an ounce. It might take a couple of years, but that would be, I'm pointing out again, I think this might be a hell of an investment. Now if we look at this year, it looks pretty bad. I mean, it's a 2-year chart, but you know, we started out about 750, we went up to about 850, we're down to about 660 right now. But again, you know, the moves in palladium could be very explosive due to a big tightening supply. And another thing, if I have it here, yeah, this is a more recent article. You know, in other words, questioning Russian stockpiles of the palladium depleted. They were saying this back in 2009. You know, typically it's mostly automotive, but jewelry's 10%. Actually, jewelry's becoming more and more of that, because it's quite a good deal because of the price depression. But electronics, they use it like a lot, and sometimes in place of gold for contacts. But it's also used in many other things besides, even in photography. But it's used a lot more in your cell phones than you think too. I mean, it's also, but the new use is going to be not just for catalytic converters, but also for hydrogen production, hydrogen purification. Because when you pass hydrogen through palladium, it kind of works like a sponge. You can visually see it blow up like a sponge. It absorbs 900 times its volume in hydrogen, and when the hydrogen comes out the other side, it's purified, so it actually cleans up hydrogen. So that could be used when you have excess solar energy for storing energy. And also the global light vehicle production is going to keep going up and up and up, which because of China and India has those 2 new cars. I forgot, one's the Cherry, I think in China is another one in India, but everybody over there is going to be having cars pretty soon. And they're still going to be using the gasoline type engines for quite some time, even if electric comes out or whatever. So you're going to see more and more palladium being used, just even for purification of hydrocarbons and things like that. But again, just beware of market sentiment. Market sentiment was very, very high when palladium was going up this high. People were thinking, you know, where's it going to go? It's going to go to $2,000 an ounce, and it crashed. Right now, for the metals, it looks like the market sentiment's the other way. But I think that's rapidly changing. We're seeing that in the last couple of weeks. The dollar index is going down. It might hit a record low. It might go below 70 for all I know, and I think that's probably going to be the case. So we might see silver take an explosive move up. It's a crazy metal. As far as pricing goes, it's very, very volatile. We might see an explosive move up to the upside, and maybe it would touch this crude trend line I put here, that it would hit $75 to $100 in a matter of 3 or 4 months. The people that panicked into the dollar, I can't see them staying in there now with this trend line going down on the dollar. They're going to run someplace, and I don't think it's going to be in the general equities, the euro, the Swiss franc, or the Japanese yen. It's probably going to go back in the metals.